the shortened trading week.
No surprises that it was really quiet on the market today, Kate, and that's because of the three-day trading week. A lot of people in the market taking those 3 days off and having an extended holiday. But the market up by 0.5%, and that's really in line with what the US has done while the Australian market has been closed for the Easter break. In fact, if we have a look at the rebound that we've seen not only a rebound in tech stocks, but really earnings in the US have been better than expected, and I think that's helped the rise that we've seen in the US stock market, with last night being the 5th consecutive days of gains for the US. In fact, as of last week, we saw 82 companies in the S&P 500 index reporting earnings, and we've seen 66% of them beating expectations. So at the moment, we are seeing first quarter earnings per share growth tracking at 3%, which of course is above expectations and ahead of what we were expecting when we started off these earnings seasons. So earnings really important, and that strong earnings coming through from the US helping the Australian share market. If we have a look at stocks today, we did see some of that speculation around China stimulus really disappearing, and that was reflected in the iron ore plays. We saw iron ore prices down by 2.7% and some weakness in BHP, Rio, as well as Fortescue. But on the other hand, we did see the strength in the banks. Now, the banks are coming up to dividend paying season. ANZ, NAB and Westpac all pay their go ex-dividend in May, and we actually saw an all-time record high being reached for the likes of ANZ as well as for Westpac. We saw Woolies also hitting an all-time record high. So some of those high-yielding, stable companies on the market, those defensive companies on the market, really doing quite well in today's market, but difficult to read too much into it given the low volumes.
Julia, I also wanted to ask you about the oil search numbers we got out today, some production numbers there. What did you make of what we heard?
Look, the first quarter production numbers for oil search were actually below expectations for us. But if we have a look at oil search, I think the key is its Papua New Guinea LNG project. Now, if we have a look at what oil search has said today, they have reiterated their guidance for the full year and said that they expect production to be on the upper end of that guidance. Importantly, they have said that the Papua New Guinea LNG project is actually ahead of schedule. So they are expecting to see first gas a few months before initially anticipated. Now, initially we were expecting to see first gas from this project in about October. Now it's looking like it's going to be May or June. Now, this is a huge lift for oil search in terms of its production profile as well as its earnings profile. So we've actually seen the shares up by 0.2% despite that weaker first quarter production report. So oil search shares up by 0.2%. Really, this is about the Papua New Guinea LNG project and what it's going to do to its production and earnings profile.
Yeah, it sounds like it. Also, I wanted to get your take, I guess, as well on oil search and whether that's one of your favourites at the moment. We've spoken to a couple of analysts today who say they would prefer the likes of Origin or Woodside Petroleum. What about yourself?
I think it depends on what you're looking for. If you're looking at a stock like Woodside Petroleum, I mean, first-class assets in its portfolio, but really you're looking at a company that's not looking at high growth for a number of years. It's got an 80% dividend payout ratio, so a very strong income there. But if you have a look at its growth projects of Browse or Sunrise, these are a number of years off. And of course, if we have a look at the Leviathan gas project over in Israel, there are a number of uncertainties attached to that. So I think you go with Woodside Petroleum if you're looking for a lower risk portfolio and you are looking for stronger income. If you are looking for growth, then that growth is going to come from stocks like Santos as well as Oil Search, those massive liquefied natural gas projects, and the very strong prices that we're seeing for LNG on the East Coast as well. So I guess Oil Search as well as Santos really going to benefit from the Papua New Guinea LNG project. In the case of Santos, also the Gladstone LNG project. So if you are looking for growth, this is where the growth is going to come from. Share price was down today is because we've seen Crown actually try to get into the US market twice before during the global financial crisis, and it was a disaster. If we have a look at the actual investment that the media speculation has centered on, it's the Cosmopolitan, which over the last 3 years is actually a loss-making casino. It's lost $300 million over the past 3 years. So at the moment it is owned by Deutsche Bank. They have been trying to sell it for a while. If Crown does look into the US, then it'll probably be an investment of about $1.5 to $2 billion if they do go it alone. We have a look at Crown. I guess the reason why they are looking at growth opportunities is because some of their capital expenditure programs in Perth as well as Melbourne are starting to wind down. And also if we have a look at Macau, they're seeing a very strong performance there, a special dividend of about $64 million being paid to Crown, and then we'll probably see dividends of about $130 million a year coming to Crown from just that venture alone. So they are looking at growth options. We know they're looking at growth options still currently in Macau as well as Sri Lanka, and Sydney and Barangaroo, and then Queensland possibly as well, and Japan as well. So there are a lot of growth options on the table. I guess the flip side is if they do bid for these US assets in Las Vegas, then what we could see is potential upside for Echo Entertainment, because it probably means they won't go ahead with some of their other plans in Australia, and I'd imagine they'd give up something like the Queensland casino expansion over there. So we could see potential upside for Echo Entertainment coming through from less competition. But I think the reason why the shares were down 1.1% today, and we are seeing a bit of cautiousness, is because we have seen Crown try and crack that US market, and it's been unsuccessful twice in the past. The big ones this week. In terms of stock market action, we're expecting to see a very quiet week, but tomorrow we will see the inflation numbers out domestically, and that's going to be very important. They're out at 11:30 a.m. We know that the Reserve Bank tries to aim for that 2 to 3% inflation band, and the expectation is that we will see the March quarter inflation numbers coming in at 0.8% growth quarter on quarter, or 3.2% year on year. So there is a very high chance that we are going to see inflation moving outside of that 2 to 3% band that the RBA aims for. Now, what this will mean is that the RBA will probably have to move from that neutral stance that we've seen in terms of cash rates, and we'll probably see those rate hikes being put forward in terms of forecasts by economists. So predicting to see rates going up in Australia, and that's quite interesting because the other forecast is that we are going to see unemployment go up, and of course mining investment also slowing down. So it's going to be a big number tomorrow, a big number for the Aussie dollar, and then 15 minutes later we get the China flash PMI numbers. The April reading we're expecting to see 48.3, which would be a slight improvement from the previous read of 48. But of course what's happening in the markets at the moment is that we are seeing an unwinding down of expectations around stimulus coming through from China, and that's having a negative impact in terms of the material space. So just continuing to watch, especially the iron ore price, which did have a big move overnight, down by 2.7%. So although we are expecting to see a very quiet week in terms of stock action, it does look like it's still going to be a pretty big week in terms of Aussie dollar action.